On the 16th of September 1992, a single man changed the fate of a nation's currency forever. The world would remember that day as Black Wednesday, and the man at the center of it, the man who broke the Bank of England, was George Soros. But was he truly a villainous market manipulator, or was he simply the only one willing to admit a dangerous truth? Let's step back and understand how this moment came to be. In the early 1990 seconds, Britain was part of the European exchange rate mechanism, a system designed to keep currencies stable across Europe. The British pound was required to stay within a strict exchange rate band against the German Deutsche Mark, but there was a huge problem. Britain's economy was weak, inflation was rising, and interest rates were climbing. Meanwhile, Germany was strong and unified after the fall of the Berlin Wall. The two countries were tied together financially, yet moving in completely opposite directions. How long does a fragile currency survive when it is forced to act strong? The British government insisted the pound was stable, but a system built on illusions rarely survives for long. Soros and his quantum fund began studying this imbalance. He asked the question few dared to ask: what if the pound isn't actually worth what they say it is? What happens when belief and reality no longer match? Soros realized the government was fighting the market, not guiding it. And when governments fight markets, who usually wins? He prepared for one of the biggest financial battles in history. Soros began selling short over $10 billion of British pounds, betting the currency would collapse. It wasn't just a trade, it was a declaration. The emperor has no clothes. But here's the twist. Soros didn't act alone. His move sent a powerful message. Other investors began to doubt the pound as well. Fear spread, momentum accelerated. The reflexivity loop was in motion, belief changing reality. The British government fought back desperately, raising interest rates twice in a single day, from 10% to 12% and then to a shocking 15%. Imagine being a homeowner and watching your mortgage suddenly double. Would you panic? Investors certainly did. Instead of restoring confidence, the move confirmed what Soros had believed. Britain was losing control. The Bank of England spent billions of pounds trying to buy back its own currency, trying to prove to the world that the pound was strong even as it collapsed. Late at night, the government finally surrendered, withdrawing from the ERM. The illusion shattered, the pound fell, and Soros reportedly walked away with more than $1 billion in profit in a single day. But the bigger question is, what did he really win? For some, Soros was a genius who exposed weakness in a flawed system. For others, he was a predator attacking a wounded nation. So what do you think? Should an investor be blamed for seeing the truth faster than a government, or is the government responsible for creating a lie in the first place? Black Wednesday became a symbol of humiliation for Britain, but also a wake-up call about economic honesty. Soros later said, "I was merely the visible hand," meaning the crisis was inevitable. He simply accelerated what was already unfolding. That statement forces us to rethink everything. Do markets punish countries that pretend? Do investors reward those who admit their mistakes early? Britain suffered in the short term, yes. But with the pound freed from an unrealistic exchange rate, the economy eventually recovered faster than expected. What if the collapse was actually a cure? Soros didn't break the Bank of England. The belief that the pound was strong broke under its own weight, and Soros, he just refused to believe a fantasy. Black Wednesday teaches us a powerful lesson. Markets do not respect political pride. They respond to truth. But whose version of truth matters? Is truth whatever a government declares, or whatever investors believe? Let's explore the deeper psychological and geopolitical implications of this crisis. European leaders wanted unity, a shared financial future. But unity requires sacrifice. Britain wasn't ready. It wanted the benefits of European cooperation without the economic discipline required. Soros identified this contradiction. He recognized that the British government wasn't managing the economy, it was managing perception. Have you ever told yourself everything was fine just to avoid facing a problem? Britain did that on a national scale, and the market saw through the lie. Soros's critics argue he profited from misery. But think about this. If one man can collapse a currency, how strong was that currency to begin with? If a structure falls and someone pushes lightly on it, do we blame the person who pushed or the people who built it so weak? Black Wednesday revealed the fragility of financial systems when leaders try to force stability. The deeper truth was that Britain's economy needed flexibility. The market provided that brutally. Yet here's the irony. After the collapse, Britain's economy surged. Exports rose. Growth improved. Unemployment eventually dropped. Could it be that the fall liberated the nation from a cage of unrealistic expectations? If so, then Soros did not destroy Britain, he freed it. Still, the event shaped the world's perception of him forever. Headlines called him the man who broke the Bank of England. Politicians labeled him dangerous. Ordinary citizens blamed him for economic pain. Why do people fear those who reveal uncomfortable truths? Perhaps because it forces everyone to confront their own role in a failing system. The story of Black Wednesday also highlights the terrifying power of belief. Millions of people held pounds in their bank accounts. Overnight, those same pounds were worth less, not because the physical notes changed, but because collective belief changed. Reality shifted. Reflexivity again. Now think about today's markets. Digital currencies, speculation-driven trends, social media influence. If a single tweet can send a stock soaring or crashing, who really holds the power? Governments? Investors? Influencers? You? Soros famously said, when I see a bubble forming, I rush in to buy. He doesn't fear volatility. He rides it. He shapes it. He understands that chaos is not an accident, it's a process. Some people run from disruption. Soros profits by predicting it. So here's the final question I want you to answer for yourself. Is George Soros a hero for exposing financial illusions? Or a villain for using reality as his personal playground? There may not be a clear answer. Villains and heroes often look the same, especially in a world driven by money and fear. What is undeniable is this: Soros changed history. A single decision shifted global finance and proved that sometimes chaos is the only path back to truth. And on that day in 1992, truth won. Reality defeated illusion, and the world learned that no government, no matter how powerful, can escape the judgment of the market forever. Perhaps the only true crime is refusing to see the collapse before it arrives. So if you were in Soros's position and you saw a flaw big enough to break the financial world, would you warn the system, or would you bet against it and let destiny unfold? The line between strategy and destruction is thin. George Soros walks it better than anyone. And Black Wednesday will forever stand as proof of the power of one man's conviction to change the global economy. Thank you for watching. The story of Black Wednesday reminds us that markets are built on confidence, and confidence can vanish in a heartbeat. George Soros didn't just predict a crisis, he exposed the truth the world refused to see. Now I want to hear from you. Was he a visionary or a destroyer? Share your thoughts in the comments below. And if you want to keep uncovering the hidden battles shaping global finance, make sure to like this video, subscribe, and hit the notification bell so you never miss the next episode. Until then, stay curious, stay alert, and never take the market stability for granted.